Hey guys, it's Harry here. Ever wondered how some real estate investors rapidly build massive wealth, seemingly overnight, while others struggle for years without making much progress? Today, I'm pulling back the curtain on a powerful method that investors use to turn a single property into an unstoppable money-making machine. It's called the BRRRR method, and by the end of this video, you'll know exactly how to use it yourself to build wealth faster than you ever thought possible. But wait, what exactly does BRRRR mean, and why are investors so obsessed with it? Stick around because in just a minute, I'll reveal the hidden secret that makes this method so incredibly effective. Alright, let's dive straight into it. BRRRR stands for Buy, Rehab, Rent, Refinance, and Repeat. Each step is crucial, and if you get them right, you'll quickly multiply your profits. But get even one step wrong, and it could turn into a costly disaster. Let's break this down, starting with the first step, buy. Most investors think success starts when you sell a property, but the truth is, it actually begins the moment you buy. The secret? Finding deals below market value. Imagine buying a house worth $200,000, but you only pay $150,000. Sounds impossible, right? Well, there's a secret to doing exactly that, and I'll share it in just a moment. But first, let's talk about the second rehab. The goal here is simple. Add enough value to significantly boost the property's worth. But here's the twist. Many beginners waste thousands of dollars on renovations that barely affect value. So, how do you know exactly what renovations will maximize profit without overspending? Here's the secret. Focus only on the improvements that increase rental income and property appraisal. Kitchens, bathrooms, paint, and landscaping usually offer the biggest bang for your buck. I've personally seen properties jump tens of thousands in value with just these simple upgrades. But here's the million-dollar question. How do you ensure your rehab budget doesn't spiral out of control? Keep watching, because in just a second, I'll share a little-known strategy that seasoned investors swear by. Alright, step 3 is rent. And this is where the magic starts to happen. Renting out your newly renovated property generates instant cash flow. But here's the problem. Most investors don't know how to set their rents effectively. Set it too low, you lose money. Set it too high, your property sits empty, draining your bank account. So, what's the trick to setting the perfect rent every single time? Here's a quick tip. Always research local rental prices carefully, aiming just above average for similar renovated properties. Trust me, your tenants will pay a premium for quality. Now onto step 4, the critical step that can unlock your investment. Refinance. Refinancing lets you pull out your original investment, plus extra money, allowing you to repeat the process again. But here's the catch. Many investors don't understand how banks determine refinance values, and this can leave thousands on the table. So, how do you maximize the refinance value and ensure banks give you the biggest loan possible? Stay tuned, because in a minute, I'll reveal a powerful secret technique that banks don't openly share with borrowers. Finally, step 5, repeat. This step is why the BRRRR method creates wealth so rapidly. After refinancing, you get your original cash back to invest again and again. Imagine doing this just 3 or 4 times. You could quickly build a multi-million-dollar portfolio using the bank's money, not yours. But now, back to the first critical secret I promised. How do you consistently buy properties below market value? Here's the key. Motivated sellers. Motivated sellers are people who need to sell quickly, often due to financial distress, relocation, or inheritance. Finding these sellers means you can negotiate significant discounts because they value speed and convenience over price. But wait, how do you actually find motivated sellers? There's a surprisingly simple tactic the pros use every single day, and I'll share exactly how it works in just a second. Before I get to that, let's circle back to rehabbing your property without blowing your budget. Experienced investors swear by what's called the 70% rule. This rule states you should never pay more than 70% of the after-repair value of the property, minus your rehab costs. Stick to this, and you'll consistently come out ahead. Now, how exactly do banks decide refinance values, and how can you make sure you get the absolute highest appraisal possible? The answer is simple yet often overlooked. Presentation. Before the appraisal, make sure the property is spotlessly clean, staged with minimal but tasteful furniture, and all renovations documented clearly with before and after photos. This tiny effort can add tens of thousands to your refinance valuation. Okay, I've covered a lot, but we're just getting started. In Part 2, I'll reveal the exact tactics investors use to find motivated sellers, secure amazing deals, and repeat this process rapidly to scale up their real estate empire. Keep watching. You won't want to miss what's coming next. Now let's jump right into finding motivated sellers. Where do you even start? First, online classifieds and real estate listing websites are goldmines for distressed sales. Look for properties marked as needing TLC or listed as is. Secondly, consider working with local wholesalers. These guys specialize in finding hidden deals you'd never see on public listings. But there's one technique even more powerful than these, and hardly anyone talks about it. It's called driving for dollars. Here's how it works. Simply drive through neighborhoods, looking for signs of neglect or abandonment, overgrown lawns, peeling paint, boarded up windows. When you spot a potential property, jot down the address and contact the owner directly. Believe it or not, this old-school method is responsible for countless below-market deals every single year. Now you might wonder, what's the quickest way to contact these property owners? Direct mail is effective, but for even faster results, try skip tracing services. Skip tracing provides the owner's phone number instantly, letting you negotiate directly before other investors even know the property exists. All right, we've found and renovated the perfect property, set ideal rents, maximized our refinance, and got our cash back. But now comes the true magic, scaling this method to quickly build wealth. So how do experienced investors grow their portfolios rapidly without becoming overwhelmed? Here's the secret: they build systems. Creating clear, repeatable systems for every stage of the BRRRR method allows you to outsource repetitive tasks and focus only on high-value decisions. Property management, tenant screening, marketing, and even rehab processes all can be streamlined or delegated, freeing your time to hunt for the next great deal. But systems alone aren't enough. You'll need leverage, specifically financial leverage, to multiply your returns. Smart investors know exactly how much debt is safe to take on. Too little and you leave money on the table. Too much and you're overextended, risking financial ruin. So, what's the perfect balance? A common rule of thumb is the 1% rule combined with prudent debt-to-income ratios. If your monthly rent equals at least 1% of the total investment cost and your debt remains comfortably manageable based on your monthly income, you're likely in the sweet spot of profitable leverage. Here's another powerful tip. Never underestimate the importance of relationships. Building solid connections with real estate agents, contractors, property managers, and lenders can significantly accelerate your wealth building. These relationships provide off-market deals, preferential lending terms, faster project completions, and smoother operations overall. The bottom line: real estate is a people-driven business. Treat your network well and they'll reward you generously. Now let's address the question everyone secretly worries about. What if the real estate market crashes? Is BRRRR still safe? The answer is reassuring. Done correctly, the BRRRR method is incredibly resilient, even in market downturns. Because you're buying below market value, adding immediate equity through renovations, and generating steady rental income, your investments remain secure, even if property values temporarily dip. But here's the key to surviving downturns. Always keep a healthy cash reserve. Experienced investors maintain at least 6 months' worth of expenses per property. With solid reserves, you weather downturns effortlessly, and you're perfectly positioned to snap up incredible deals when others panic. So, to quickly recap, the BRRRR method is a powerful, repeatable strategy for rapid wealth building. buy undervalued properties, renovate smartly, rent effectively, refinance strategically, and repeat the cycle. Combine this approach with strong systems, responsible leverage, and great relationships, and you're unstoppable. Imagine this. Starting with a single investment property and within just a few short years, building a portfolio large enough to comfortably retire or live the lifestyle you've always dreamed of. It's completely achievable, and it's exactly what investors are doing right now using the BRRRR method. But knowing all of this is just the first step. The real power comes when you take action. So let me leave you with one simple challenge. Take a moment today, jot down your first actionable step, and commit to it. Whether that's browsing property listings, contacting an agent, or simply researching neighborhoods, every big success starts with small, focused action. And there you have it. The BRRRR method explained from start to finish. Remember, building wealth isn't reserved for a special few. It's achievable for anyone willing to learn, act, and repeat. If you've learned something new or found value in this video, let me know your thoughts below. Until next time, keep building, keep growing, and I'll see you soon.